Hello, Maverick traders. Welcome out to your market roundup for April 27th. Wow, an explosive upside day in the markets, and let's get to it. Now, you're going to see it in the numbers. Dow, S&P, NASDAQ, Russell, all well in excess of 1%. You can see the NASDAQ exploded higher, and then Amazon reported earnings after the bell, and it's higher after hours. So the NASDAQ looking to gap even higher after a 2.7% upside day. Oil up 0.7%, gold flat on the day. As we look at the daily news, Meta with a big earnings beat, and this continues for large cap tech. I mentioned Amazon beat after the bell, Google was up, Microsoft was up, Meta was up. I mean, it's just beat and the stocks go higher. Also, there was a big miss on advanced GDP. It came in at 1.1% versus 2%. Now, you'd look at that and you'd say gross domestic product, U.S. economy slowing down, this should be really bad for stocks. Well, this could be a case of bad news, good price action. Maybe they're expecting the Fed to be on hold or less hawkish, fewer rate hikes, less aggressive with tightening, and so on. So sometimes bad news, and you take that as the Fed will slow and people buy stocks accordingly. Advanced decline line 26% going down, 71% advancing. The 50 period moving average still a little bearish with 60% of stocks below that, but the equity markets are higher and they're being pulled higher by the biggest large cap names, and those are the most important names in the market. Now, I mentioned this I'm not a big Twitter guy, but I did send a tweet yesterday. And my call was markets to bounce and bounce big. And the reason that I did was a cup and handle pattern. Now, I think this is the first tweet I've sent in a couple of months. So I'm not a big Twitter guy, but I bought the market at 40.72 yesterday. And it looked pretty lousy because the market finished lower. But what I priced out was a cup and handle. The handle was about 30% of the size of the cup. And I always say it's not a perfect science. I wasn't predicting that it would stop at exactly 40.72. It's that this is the area where buyers should step back in. Think about it. A lot of buying pressure just to get us back to retesting this big resistance zone from the past. Here's a resistance established. Here's the retest. You back up off of that, and a lot of the short covering comes in, they cover their shorts because they were in a lot of pain on this advance, they get a better price, that adds buying. A lot of people that miss the move, they buy the dip. A lot of people that sold well up here, they buy the dip. There's a lot of reasons to be a buyer right here, and don't lose sight of the fact that we're in a bullish market. 20 still sloping higher, bullish crossovers and so on. So I was looking to buy the dip, hoping that we would get this big cup and handle. It happened. I had talked about this in prior market roundups, perfection, and I think we go sharply higher. And in fact, if you wanted to have a projection of how far you can go, you can take the size of this handle portion and project it to the upside. And it prices out, I did the math, as 4180 is resistance. 108 was about 30% of the size of that. So basically, your upside target above 4180 is 4288. That's significantly higher. So if we break out, and the third time's probably going to be the charm for a breakout, we can go all the way to 4288 on the upside. Still quite a bit higher from where we're at, and that's even after today's 2% upside move. NASDAQ looks equally strong. You had a pullback. We don't have the Bollinger Bands on here, but actually if you look at it, it hit the lower Bollinger Band, still above the 50 MA. So that's another buy signal suggesting the NASDAQ should bounce right here, right now, and it's doing so. Looks like with Amazon's move, we're going to be up here tomorrow morning, breaking out to the upside. This, my friends, is a bullish market. Look at Meta, formerly known as Facebook. Look at the size of the squares. That's how big they are as a weighting in the S&P 500. And look at these big large cap names. And Amazon, again, up big after hours. So it's not that this is widespread and everything's taking off. But man, if these big names take off in dramatic fashion and have big breakouts, they're going to pull everything up with it. This market breadth will widen out in all likelihood. So most sectors certainly in the green, a nice upside move. We're above the 20, we're above the 50, we've got some upward slope. I think the path of least resistance is still higher in this market. Let's look at a few different names here. So Adobe has pulled back. Again, Bollinger Band buy setup hit the lower band above the 50 MA, starting to move back up. In addition to that, patterns within patterns, things that I like, kind of a big cup and handle. And I suspect even if you're just not super aggressive here, it should be making a move back up towards that prior high. If you adhere to Elliott Wave, it sort of had that nice A, B, C style correction. Anyhow, I think a move up here towards at least 386 in the shorter term. Could be a diagonal spread. Could be something where you target 386 in the short term. Alphabet, formerly known as Google, high basing, I suspect will start to break out here and should continue to the upside. And last but not least, T-Mobile, which this was pulled down by AT&T earlier this week, and T-Mobile is taking market share. I'm not sure I understood that. Well, AT&T is staying down, T-Mobile's bouncing back. I would have liked this from a buy the dip perspective, even though it's a little late. I still think an upside breakout is happening, but you can probably find a little better price point to take a position there in T-Mobile. Then on the bearish side, I mean, obviously I'm bullish, thinking that the markets can push higher since yesterday. Well, now I've got to think about things that if they get a mild bounce, what would I look to short into? An AbbVie plunge to support. Now I think we can get a little bounce, and I'm looking to short a couple of day rally. That would be the idea. If it sets up, great. If not, no harm done. Kind of the same thing here with Prudential. We're still below some declining moving averages. There's the 50 MA. We might bounce for another day or two, but it looks like kind of a wedging pattern in effect here. Symmetrical triangle of sorts, and we're at kind of coming into the apex, and my bet is, given the big plunge previously, that we should leave out of this pattern to the downside. So considering a short position on a bounce, and then also with target, thinking about things that can bounce for a couple of days and look like really good setups after a couple of day rally. Target would fit that mode as well. Kind of a little mini inverse cup and handle or descending triangle, whatever you want to call it, looks more bearish than bullish. Next move should be a push down below that support level. Now, it's entirely possible that the entire market pulls these up, and that's why I was trying to think of things that would look better in a few days after a bounce on the short side. So stocks continue higher, big cup and handle pattern. We continue to shake off quote unquote bad news. I mean, think about the GDP. Huge miss, almost a 1% miss, and markets up 2%. Tomorrow morning, we get an inflation number, and this is one that the Fed watches, core PCE. If that comes in really hot, not great for the markets, because markets will say this is the Fed's biggest concern and biggest risk is that inflation is running too heavy. They're going to try to fight that inflation, and so a high PCE number, not great, but if it comes in at or below expectations, this market rally should continue. On the earnings front, Colgate, Chevron, and Exxon, these large cap energy names, they'll move the energy markets tomorrow. Hope you enjoyed the market roundup. Have a great rest of your day, and we will see you next time. Goodbye, everyone.